goes. But with that, let's also bring you another important story. After the merger of Shriram Transport Finance with Shriram City Union Finance, Shriram Finance reported assets under management of 1.71 lakh crore, of which Tamil Nadu accounted for 30,000 crore rupees. Now, the newly merged NBFC is banking on an economic turnaround to fuel growth. CNBC-TV18's Jude Sanet caught up with Executive Vice Chairman Umesh Revankar and asked him whether escalating fuel and CV prices could actually impact their plans. Let's listen into that conversation.
The challenge has come around 2 years back when the upgradation from Bharat Stage 4 to 6 we made. So because of the technology involved, 15% on an average the price went up for all the vehicles. Subsequently, the steel prices and input cost went up, and that added another 10%, 10 to 15%. So around 30% price increase happened in the last year.
Right.
Now, people have postponed. When the price goes up steeply, people postpone. See, if the postponement, then what happens is demand steeps up steadily. When people realize this is the new way of life, so you don't stop doing anything, but you postpone. But once you gather more initial money, then you buy it. So ultimately, people who want to buy a new vehicle, they have to buy a new vehicle because many of their contracts or many of their business activity, if at all you are going from Chennai to Delhi, you don't run that distance with an older vehicle. You have to have a new vehicle. But the only thing is, instead of selling at the end of 3 years or 4 years, you may sell it at the end of 5 years or 6 years. You postpone. So ultimately the demand will come. The replacement of these assets will keep happening. And this older vehicle will go into rural area or smaller distance. From Chennai to Coimbatore, it will run. It is not that it will retire. So the postponement has happened because of the slowdown in the economy and also because of the price increase. And people got adjusted. But as far as fuel price is concerned, if you look at the fuel price, it went very steeply in last year, April, May, when the geopolitical tension in the globe and crude price went up. And government reduced the tax, and moment government reduced the tax, it stayed at a particular level. And so Indian fuel gets taxed around 40 to 45%. And unless the government reduces the tax, fuel prices do not come down very steeply. And many of these oil marketing companies or manufacturers, they had taken some kind of hit and they need to gain back a little. So it is, I think, fuel prices have not really changed in the last 6 months. People have already got adjusted. So people got adjusted to the price, people got adjusted to the price of the fuel, and it gets passed on to the end consumer. Ultimately, who will pay? Right. I and you will pay. Yes. This vegetable price goes up, the food grains price goes up, the FMCG product price goes up. It gets marked to that.
So are you saying that it has had no impact on financing whatsoever as things stand today?
No, on financing it had no impact. In fact, when the price goes up because of inflation or some reason, the finance companies benefit in the sense the asset behind the lending or loan value goes up. Right. My resale price have gone up for all my vehicles. So automatically what happens is I am more confident of my portfolio because all my loan has asset coverage of more than 2 times or 3 times.
Right.
All right, that was the word coming in from the Shriram management. But with that, we have to get into a short break now. You don't go anywhere because on the other side of this break, we're tracking all of the action from the commodity market.
Invest One